Hey everybody, welcome back. Sive Morten is here with the ForexPeaceArmy.com. So let's take a look what's going on in the Forex market. In general, this week will be the short, just because it's holidays. Actually, I don't know what really activity we will get. Currently, I see that definitely the volatility has dropped and actually market stands in relatively tight range. So, in the weekend, we talked about potential bearish scenario, and we said that area around 1550, 1560 is looking actually nice for possible taking long short position. So this part of our trading plan is done. So market really has reached this level. If you have taken position, that's great. So you could protect it with the break-even stop. But currently, the question is what to expect next. Currently, in the recent few sessions, market shows kind of the indecision action, so you can see some kind of the doji patterns around. It's difficult to say what the reasons are, so either this is just the holidays and low liquidity, or just market really is waiting for something. So, but overall context remained bearish, and here situation stands relatively simple. With the performance that we have here, we do not want to see very deep retracement if market still will show strong upward action. Direct continuation right now, it's the perfect scenario for us, but if market will show some minor bounce somewhere back to the 1580 area, for instance, we will not have any objections, just because it might be the part of the butterfly pattern. And the patterns that we see currently, they are not exclude this possible scenario. Although I wouldn't say currently and wouldn't talk about the major reversal with the possible upward continuation, but some stronger upward retracement is possible. And today we will decide what to do with the positions that we have and what else we could trade in the current situation. So downside target with our 3-drive pattern and potential butterfly stands around 1420, approximately 1420, 1425. This is as a crossing of the two extensions that create the target of the 3-drive. On the fall time frame chart, market actually is not hurry up to the downside. With the grabbers that we've got, we also talked about this actually was the reason why we said that let's wait for 1560s, just because these grabbers might be completed. And they're also very comfortable intraday resistance, so it makes almost a riskless chance to actually take the position. This action has happened, but now you could see that market is forming kind of the head and shoulders pattern. We actually talked about this and said that entry around neckline will be a really great decision. Why? Because you have low risk, because if even hand shoulders will form, you still will get the bounce out from the neckline, protect you. And if hand shoulder starts failing, you already will have the position. Currently, you can see that market has dropped the predefined target. A 618 support where actually right arm stands. With the position, if you have it, you could make a decision what to do, either to close it or maybe split in parts, for instance, grab the half of the profit and keep the rest with the break-even stop, hoping that these hand shoulders will fail and market will keep going lower. That's for bears. At this point, right at this moment, taking the new short position, I think that's not quite correct, based on the patterns itself. And in fact, although this stop was very close to this one, but still nominally, the grabber is not completed, so market hasn't quite breached the top. So for a few pips, it means the target is not done yet. A third reason why it's not a good idea to take the short positions right here is just because if we are correct on the butterfly that we have here, market could complete this hand and shoulders somewhere around the 50% resistance, probably 1575, 1570, somewhere in this area, with this kind of the ABCD, which will become the wing of the butterfly, or even 1618 target might be reached. This also will not be the problem. And only after that, the major downside action could start. So taking position here, it's not quite correct in the current situation. On the bullish side, nominally, we do not have a lot of context for taking positions as well, because actually daily trend is bearish. You only could rely either on slightly uncompleted grabber or directly on a hand shoulders pattern. The attractiveness of this situation that you could place very tight stop, somewhere between the bottom of the shoulder and the head, or if you could afford this, you could place even slightly below the head. With this potential ABCD to the upside. This might happen. Now, if we take a bit broader view, why I'm still a bit, well, worried about current situation in terms of the possible bearish continuation. Other markets behave a bit bearish. So on a Great British Pound, for example, take a look what's going on. Some kind of the tight sideways consolidation. If you take a look at the hourly chart, you can see it even better. It's very difficult to call as a reversal, right? So it's a very sloppy and choppy action. There's a lot of overlapping candles. It's not the thrusting action. Some churning inside here. By taking a look at the dollar index, it's the same story. So on the dollar index, you could see that it stands very in a tight range here after the solid upward action, which also could mean that, well, it might be the upward continuation here. On the 10-year bonds, we have the reverse head and shoulders. If it starts failing, right, the situation might change indeed. So if yields will start dropping, that will work against the dollar and the situation could change. But at the current point, hand shoulders is still valid, and any rising of the yields will support the dollar, which means that on euro currency we could get downside continuation to our target. So that's what I have in mind. From that standpoint of view, context for taking the long position by far is really weak. So, but it is possible. So you could actually, maybe you have your own identification whether it makes sense or not. Maybe you see something else. But for now, well, decide by yourself whether you would like to do this or not with this current potential bullish pattern. Since context is bearish, we're mostly watching for the bearish positions. So here we have it here. We discussed already what to do with this position. And for next entry, well, probably we will have to wait either the completion of this. If it will work, we will consider taking new shorts later. Or maybe if market will start really dipping to the downside, erasing these hand shoulders, we could consider an additional position taken on some minor pullback. If of course we will not get the target first, right there. So that's in towards what we have. This is really temptational, so it seems really inspiring and actually attractive for trading. But just keep in mind what I said, that fundamental is really, well, a bit fragile under this construction, although shape in general looks not bad. But at the same time, guys, risk not too big. So if you'd like to, you could try. Why not, actually? So that's probably enough for me right now. See you tomorrow.